Hi, Shae Russell here, editor of the Daily Reckoning. And joining me today is your other editor of the Daily Reckoning Australia, Callum Newman. Callum, how are you, mate?
I'm really well, Shae. Yourself?
Oh, not too bad for a fine Melbourne day, actually.
It is pretty
Now,
good.
yeah, it's not raining for a change, although I hear Sydney's been getting more rain than us, so I'm not going to complain too much. Now, as usual, I'm going to set a timer for us to completely ignore because we often run over on these chats, but maybe it'll be a good guide. Now, this week, we're going to talk about iron ore. Now, I think last week we did mention that we'd start to talk about it, and I also threw out a tidbit that I managed to call iron ore wrong for all of 2020. I kept saying that the price of iron ore was going to stop. Didn't stop. It continued to go on to new highs. I believe at one point in even March this year, the price of iron ore hit, around 178 US dollars per ton.
Yep.
Surely, with it falling back down to around 160 US bucks per ton, surely the iron ore story is done and dusted. What do you reckon?
Well, this is the interesting thing. So certainly the market at the moment is saying that iron ore is going to, well, probably has peaked and is going to trend down for the rest of the year. And the reason I say that is because Fortescue Metals, for example, has a yield at the moment of over 10%. It was, I think, even 15% last time I looked. Now, the market just doesn't leave that kind of cash lying around. It's because investors are skeptical of the iron ore price. And I'd say in the last month or so, since iron ore topped out, a lot of the iron ore stocks have come back. So you've got the big guys like BHP and Rio, and then the sort of second tier ones and the juniors. But I find this a really interesting situation because the guys, the iron ore players themselves, don't see iron ore going down much. Now, you can say that that's them talking their book and they're, trying to keep people interested in what they're doing and all that type of thing. But as of now, it is still $160 a ton, thereabouts. So in Aussie dollars, it's $200 a ton. So the companies themselves, a bit like gold stocks, are minting money, but the market itself is very pessimistic. So that to me makes it really interesting because if what the market is currently pricing in doesn't happen, there's a chance that they're going to re-rate again as suddenly everyone goes, wow, these guys are making serious money and it's ongoing.
All right, before we get into some of the long-term fundamentals and the structural setup of the iron ore market, let's talk about Aussie iron ore miners. Now, you just mentioned that they're making a buttload of money. Are we talking about just the big guys like Rio Tinto or BHP, or are there smaller players in the market that are making as much money as these ones?
Well, nobody can make as much money as BHP and Rio because their costs are so low. I think it's ridiculous. Like they can get it out, $15 a ton, say, and they're selling it for 160 US. So, but having said that, some of the operators, maybe they're $80 a ton, but they're getting 160 to 200. Whether it depends on again grade, and we can talk about that later. But again, there's potentially $50 to $80 a margin every time they put a ton on the water. Or per ton, I should say. So they're definitely making, which gives them very high return on equity. So their returns aren't as good as because BHP and Rio are so exceptional, but they're still very good businesses based on the current iron ore price.
All right, so let's just say BHP and Rio are the big fish in the market. Before we go, I want to go back to the small caps, and there is the reason why I'm going to drill down on it. So we've got BHP and Rio. Do you see any future, oh God, I'm tripping over my words today. It must be the 9 coffees I've had. Do you see any real big moves ahead in the share price for BHP and Rio?
Could do. I mean, a lot depends on I know, basically. Investor expectations around that. But as I said, those have pulled back because of skepticism around iron ore. But if those cash flows stay strong, they can certainly move up. Now, they're big stocks already. They're not going to, blow out of the water anytime soon. And BHP is a little trickier because it has coal and oil and copper, so it's more complicated. But definitely iron ore drives those businesses.
Mm-hmm.
And one point that I've come across is that it's very difficult for BHP and Rio to increase production from here. Basically, I read a statistic that they need to build. I think it's a new mine every year. I think just to hold their current production.
Right.
Now you'll know as well as me. Over the last 5 years, both of them have prioritized paying down debt and paying out dividends, and not building new iron ore mines. So the wild card is what happens in Brazil, because that's the sort of the swing production situation. If they can bring more ore online, then maybe the market will be okay. But if something happens in Brazil, and COVID is a big threat over there, and we know they've had all sorts of problems since 2019. If something happens there, iron ore could spike up again. It could surprise a lot of people.
Okay, well, actually, I'm glad you brought up the problems in Brazil. So not everybody has been following the iron ore problems in the Brazil as close as you and I. So let's elaborate a little bit on this. Obviously, there's been mine closures because of COVID. They've had mines taken offline because of the dam tailings collapse back in 2019, which Australia benefited from, unfortunately. And then there has been a ship berth or a ship dock that caught fire. So even when they were trying to get their production back up to 2019 levels, the ships couldn't get into port to get the stuff out to China where it was meaning to go. Have you noticed any other problems happening out in Brazil that I didn't cover off just then?
No, that's the main one. The thing with Brazil is it has the highest grade of ore in the world. Now, China is prioritizing high grade ore for its steel mills, but Brazil can't get all the ore that they want out because of the collapse in 2019, which is still ongoing. And again, they've had the production problems like the fire, and I think there's one other that slipped my mind. So it's put a limit on what they can do. So that's what's pushed the price up for Australia, and of course we're getting this windfall. Exports just came out today in the AFR, the record highs and record amounts of royalties and dividends, all based off iron ore. Now, again, the market is saying that this is going to slow, that it's going to go back down. Either Chinese steel production will sort of flatten out or go down, or enough supply will come in to subdue the price. But the reason I'm looking at it now is because the recovery around the world, if it comes online and we bring India and Europe and the US in, it's not just a China story anymore. Iron ore is, or steel, we should say, which is the end market, is a global market. I think it's the second biggest industry in the world. And if we do see all this construction around the world, then it's likely to keep iron ore very strong.
Which is why we're going to leapfrog back to the small cap sector of the Aussie market. Now, up until I think it was last week, I didn't know many small cap iron ore stocks existed on the ASX. But you've been hunting around in this area to see if there's any companies that are making money or that will offer future value. So why would you be looking at the small cap sector of the iron ore stocks compared to probably the bigger, more established ones like BHP and Rio?
Yeah, well, again, with the small caps, you get a situation where maybe they're not known, or they're maybe not producing yet, but they're moving into production. So there's a phase, and as a mining analyst, when as a company de-risks its project, it usually gets revalued by the market. So it doesn't necessarily mean that they have to be producing right now, but if what's happening, the high price is signaling to the market for them to bring in production. So a lot of companies already had leases in place from the last boom back in 2012, 13. Then it began to wind down. So what they did is they put those projects in the cupboard and said, well, it's not worth investing in this now because iron ore is going down. Now iron ore has gone up. They're saying, well, we've got all these ounces here. We know there's ounces there. We've done the work on that. All we have to do is raise money and start mining it. So there's opportunities in the pre-development phase for the small caps, or there's ones that have done that work now and they're going to start shipping it out and then making a lot of money. So if I can find either of those situations, well, there may be an opportunity to exploit.
All right, so let's wrap up today with one final question. Where do you think the iron ore price is going? Now, I know you said there's market expectations priced in at the market right now, but you are quite a contrarian thinker. So what are you anticipating to happen?
Well, that's an interesting question. So the first thing I look at is the market is pricing in a weak environment, so that's taken the stocks down. So in my view, that lowers the risks of entering them, because if that's what does happen, well, it's kind of already priced in. But if it goes up, then they should, George, rate higher from the higher price. I think it's possible, and you've always got to be careful with forecasts, because everything can change. But it is possible that iron ore goes back towards $200 a ton if certain things happen. Now it could stay flat, or as we know, it could go down. So I'm not trying to hedge my bets, but as again, any production problems anywhere, BHP, Rio, Fortescue, or Brazil could push the price higher. If we see demand come in from Europe or the US higher than the market expects, again, it will push it up. And another factor is it's not just about volume, it's about grade. So China is signaling to the world that it wants higher grade iron ore. Now that's not the case for every miner. Some have lower grades, some have okay grades, and some have very high grades. So any company that has high grade ore is worth watching if a bullish scenario eventuates.
And just to wrap up there, as 2020 has proven, the iron ore market can be quite surprising with how high the price can go when the market failed to anticipate it changing.
Absolutely.
All right, we will wrap up with it there because my little timer has gone off. I actually think we've only gone about 30 seconds over time, which is probably a miracle for us. Tell me, Callum, what do you want to talk about next week? What ideas are burning a hole in your pocket?
Well, very interested in iron ore at the moment. Very interested in property. We saw Mortgage Choice get a takeover bid today on the market. Went up 60% in a day. So property is of high interest to me. For my money, though, with your expertise, I want to come back to gold and silver and get an update on what's happening. It's sort of stalled a little bit. It's neither here nor there at the moment. There's bond yields, US dollar, precious metals, stock markets all mixing together. Where are they going to go? We're going to get a sort of like a quarterly summation from you.
Yeah, do you know what? I think that is a great topic to delve into, because many experts that I follow as well are just sitting around like me going, how low can it go? How much longer can this go on for? So yes, I would love to put some thought bubbles out into the digital airwaves.
Cool. All right. We'll see you then.
All right. I'll see you then, Callum. See you next week.
All right.
Bye.